Many people wonder what to do with the money they have put aside. Invest it or keep on saving it? What do you think? However, you can always do both by putting the extra cash into a money market account or an MMA. These accounts are offered by banks and credit unions and are very similar to deposit and savings accounts. However, they provide investors with higher interest rates, therefore you can generate higher yields. This article will show you how these accounts work, what their pros and cons are, how to manage them, as well as some other important things to know. Let's get straight to business. As mentioned in the intro, their mechanism is very similar to one of savings accounts. MMAs tend to offer higher interest rates than saving accounts. This means that the more money you put, the more money you will earn. Below you can read some of the most important things about money market accounts. First, you set up an account at a bank or another financial institution. The bank will pay you interest because you have put money into their account. They are paying you for using your cash. The bank, consequently, will lend this money to people at an interest rate. You can withdraw your money whenever you want. Check the section on how to manage an MMA for more details on it. The bank pays you a compound interest. See more details in the section how interest is calculated. Let's begin with the benefits of MMAs that they offer. Money market accounts offer higher interest rates and higher yields. Money market accounts tend to pay higher interest rates than other similar accounts. In addition, the rate that they offer is compounded, which means that the more your balance grows, the more money the bank will pay you. Compound interest rates are where they pay interest on the interest and they compute it on a daily basis. Self-investments is another great benefit. These accounts are considered safe and low-risk investments since they are protected by the U.S. government. If you have a bank account, it will be insured by the Federal Deposit Insurance Corporation, the FDIC, which means that even if the bank goes bankrupt, your money will be restored to you. There is a limit though, $250,000. If you exceed this limit, the money above the mark will not be insured. If you have a credit union account, it will be insured by the National Credit Union Administration, the NCUA, which is just like the FDIC. Another advantage of these accounts is their accessibility. For many people, easy access to their money is very important, understandably. You can easily withdraw money from cash machines or write checks and make transactions. Keep in mind that there is a limit on these operations. In spite of the great benefits, there are a couple of disadvantages we should consider talking about in the money market accounts. The first is the higher minimum balance requirement. MMAs usually have a higher minimum balance requirement. This is the minimum amount of money your bank wants you to have in the account. They usually range between $1,000 and $2,500. For instance, the Bank of America requires $2,500. If you fail to meet that requirement, you will be fined. In comparison, most savings accounts are free of charge with regard to this requirement. Also, there are a limited number of withdrawals. The number of withdrawals you can make is fixed. If you exceed this number, you will have to pay a fee. Sometimes the fees are higher than the interest you have generated on your money. Another thing to remember is that overall the interest rate is relatively low. Compared to savings accounts, the interest rate is higher, but compared to other investments, say bonds, the interest rate is significantly lower. For instance, the average return from investments in the stock market is 10%. A money market account can generate approximately 6% per year. In the long run, this difference can be crucial. Inflation risk is another thing we should take into account. Inflation always poses a serious risk to investments that generate lower interest rates. Basically, inflation decreases the value of money in the future. In 1999, $2,000 was different than $2,000 now. For instance, your MMA may have an annual interest rate of 2.5%, but at the same time inflation in the country is 3.4%. Last but not least is the transaction limits. Even though you can access your money in the account, there will be a limit. By law, you cannot make more than 6 payments a month using your MMA. Bear in mind that this number might even be lower depending on your bank or union. Definitely, you will not have the flexibility you can having a checkbook or a debit card. That's it for now. On our website, you can find more posts and podcasts, as well as calculators and other financial tools. Do you have a money market account? We would love to know your thoughts, so feel free to share them on the comments below. I hope you enjoyed it. Don't forget to subscribe to our podcast channel on YouTube, and we'll see you next time.